Good morning, everybody. Just got to my PC. Haven't looked at the markets yet. I'm about to right now, though. But let's see what the news is talking about first.
Along Fifth Avenue, including a Microsoft store and a Coach store. A Barnes & Noble,
It's crazy,
Best Buy, and
man. The
Nike
S&P
stores
index
were
went
also
up
reportedly looted elsewhere in
10
Manhattan.
points
New York City
after a
Mayor Bill de
riot.
Blasio says tonight's curfew will
That's a good
begin
sign, right?
3 hours earlier at 8 p.m. The music industry is also pausing business for a day in observation of Black Tuesday. The initiative #TheShowMustBePaused is aimed at highlighting racism and inequality in the music industry. Artists like the Rolling Stones, Quincy Jones, and Billie Eilish have all said they'll observe the day. A number of artists have also canceled their listening parties or fan events, virtual fan events for the day. And YouTube executives are encouraging employees to take the day off to, quote, focus on how to improve racial equality.
They're not lying though, man. If companies like this is trying to help, that's the law I'm trying to. That's the point I'm making, man.
Well, the call for companies
If one person do something
in
wrong,
Blackout
then it
Tuesday
could be their
first
fault. If
circulated
two people do
late
something
last
wrong,
week
it's
on
possibly their fault.
Instagram and other
But when the
social
whole
media
world is
platforms.
saying that you're doing
Ever
something
since
wrong,
big tech companies in the music and streaming
sometimes you just gotta
businesses
wake up
are
and
showing
listen,
up
or you're
to
gonna get
this
stuff like
movement
this.
today. Now, some of these include Spotify, Apple Music, Amazon Music,
All right,
and
well,
YouTube, which is of course owned by Google's parent company, Alphabet. So taking a look at Spotify, that company is adding an 8-minute and 46-second track of silence to playlists and podcasts to pay tribute to George Floyd today. Now, that duration is significant because it's the amount of time that former Minneapolis police officer Derek Chauvin held Floyd down with his knee, ultimately killing him last week. Spotify is also prominently promoting Black artists with curated playlists and is replacing a number of its playlist images and logos with blacked out images. Turning to Apple Music, that service has canceled its usual Beats One radio schedule today and is sending iOS and Mac OS users to a streaming station that celebrates Black music. Amazon Music is pausing its social media use for the day, and YouTube said it's pledging $1 million to support causes addressing social injustices. So a number of actions
damn, I just realized I changed something on
today
accident.
by
Let
tech
me
and
fix
streaming
this.
companies to show solidarity with this movement. And again, that hashtag is the show must be paused. Alexis?
And Emily, I know it's going way beyond streaming services. The major record labels as well taking part, including Warner Music, which, by the way, we should mention is planning its long-awaited IPO. It's expected to price tonight. What can you tell us about what the record labels are doing?
Well, we're also seeing a number of these record labels, including those big three in the US, that's Universal Music Group, Warner Music Group, and Columbia Records, owned by Sony, taking part in this movement, not participating in business as usual. We have individual artists within these record labels halting some of their individual streaming events that had been planned for the day and canceling some of those other listening events as well. Now, Viacom CBS said it's participating in an 8-minute and 46-second blackout across its network and cable channels starting at 5
All right,
p.m.
everybody.
And many record labels said in their posts
Let's get the
that
party
business
started,
will
man.
not go on as usual today, and instead they'll be using
So,
the day
of course, y'all know the markets don't
reflect
open
on
until
what they can do
9:30,
as a
but
company to put
some of
action
us can
toward
trade
change,
during
and that's with
pre-market
according
hours,
to
which
the
is
language
from
from these posts. Many are
4:30
also
for some of
pointing
us
Black Lives Matter
to
and other organizations working to
9:30,
combat
of
racial
course, and then you can
injustice.
also trade
Alexis?
post-market,
All
which
right,
is
Emily
from
McCormick,
what
thank you.
time?
These
I
protests
think
have
it's like 4 or
already
5
had
o'clock
a profound
to
political
8 o'clock.
impact, with politicians across the spectrum denouncing President Trump for last night's move to clear protesters near the White House
So
so that he could
today I'm
stage a
going to do
photo
what they
op
call
in
our
front of a
earnings trade,
damaged historic
report,
church.
trade earnings
And it comes at
report.
a time when 8
So
states and Washington, D.C. are voting in
I'm looking at the earnings
primaries. Let's
calendar,
talk about this
and I'm
now
going to
with
look at
Ben
some
Colton. He is
stocks
senior research analyst at Beacon
that ran into
Policy
some
Advisors.
problems.
Ben, it's good to see you again. Look, I want to talk to you about what the president did yesterday. He's painting himself as, quote, the law and order president. He had that photo op in front of that historic church, got a lot of backlash for it. Do you think this actually hurts his chances of getting reelected?
Thanks, Alexis, for having me on. I don't think it makes a difference right now one way or the other. I think when you're looking at the polling today, Trump, his approval rating is at 43%. On January 1st, it was at 43%. And between that time, there was the third Senate trial, impeachment trial in American history. There was the gravest health pandemic in over 100 years. And there was also the greatest economic contraction and unemployment spike since the Great Depression. And now we have these most serious public riots in decades. And so, one way or the other, Trump is trying to kind of ameliorate his base, seeing like he is the law and order president. And so it will play well with them, but that's not kind of the group that he needs to focus on. He needs to focus on kind of the undecided voters, which are younger, minorities, and more independent voters. And it's unlikely that this new law and order focus will make much of a difference.
How is Biden gaining any traction with those
Build a bear
critical voters,
workshop.
those
I don't
younger
even know
voters,
what
also
this
suburban
is. I don't
women?
think
And
I'm
it
gonna mess
looks
with
as
this.
though
So
this
let me
time
see.
around Trump may actually
Market
lose
cap
the
34
older vote,
million.
something that he had in
I don't
2016.
know.
Yeah, so Biden,
I don't
for
even know
all
if that's
the
a. Let me
criticisms on
see.
Twitter, is he's in one of the strongest positions for a challenger in modern polling history. He continues to lead Trump by 6 points,
Cracker
actually, which
Barrel.
is
Let me
the
see what
same that he
Cracker
did at
Barrel
the
look
beginning
like.
of the year. And so he's always had a popularity among older voters, which he's leading among Trump. Now, he does
It's not
have
coming
some
down
problems
enough.
with younger voters and among non-white voters as compared to Hillary Clinton 4 years ago. But it's tough to see that these voters, when push comes to shove, will end up voting for Trump. And Biden's done a much better job consolidating the anti-Trump vote compared to Clinton 4 years ago.
Ben, the rising civil unrest that we are seeing in the country right now, does that change the long-term prospects for the stock market?
I'd say
Oh, this one right here is 46 cents. I don't mess with these cent
in
ones,
response to
man.
the plight of kind of the
I'll
racially
pass on that
socioeconomic
one.
injustices. There are a lot of comparisons to
Let me
the
take a look at
riots
this
and
one more
protests from
time. I'm
1968,
gonna keep my eye on this
going
one.
from kind of the Vietnam War, the Martin Luther King assassinations,
I'm gonna keep
and
my eye on
the
this one right
distrust in
here.
government. And yet, in 1968, the economy grew at
If
nearly
this one can
5%.
give me, nah, this one's
Unemployment rate was
$2.
below
I don't really like
4%,
these cheap
and the
ones,
S&P
man.
500 gained 8%
Nah,
for
I'll
the
pass
year.
on this one as
So I
well.
don't think the market today sees
I'm not a fan of the cheap,
the protests as an economic
the cheap
issue, more of a moral and political event. Now,
stocks.
granted, compared to 1968, we are dealing with a kind of a health pandemic and an economic recession. And as the economy tries to reopen in cities like Washington, D.C., continuing protests beyond 1 week could certainly damper the reopening process and put kind of pressure for increased unemployment. And so those were things to look for in the coming weeks ahead.
All right, so their longevity is what you're saying could actually turn these protests and riots possibly into an economic event. But I want to talk about these primaries that we have going on today. One of them could mean the end of a career for 9-term Iowa GOP Congressman Stephen King. I'm wondering, which races do you find to be pivotal today? Which ones are you really watching, Ben?
Yeah, certainly there are some races where the national GOP does not want to see kind of their current brethren continue, especially Steve King. I guess the one race that I'm focusing on is the primaries in Pennsylvania. Now, we know Pennsylvania will be a battleground state in November, but COVID-19 has kind of changed the operations of elections, particularly with mail-in ballots. And that in Pennsylvania, we saw an 18-fold increase in the number of requested mail ballots from 4 years ago. And, poor execution and uncounted ballots could be an alarm bell for November, when there will be undoubtedly an increase in the surge in absentee ballots and a potential reemergence of coronavirus in the fall.
And we know that mail-in ballots has been a bone of contention for our president as well. Ben Colton, Senior Research Analyst at Beacon Policy Advisors. Thanks for being with us.
Thank you for having me.
Brian?
All right, let's head overseas and check in with Edmund Heafy. Edmund, European stocks, quite the roll, 12-week high.
Yes, Brian, the Pan-European Stock 600 index is now up around 1.3%. It's now trading at its highest level since March 6th. We have yet to see any kind of major market reaction to the civil unrest in the US. So I think really what we're seeing is optimism about the recovery from the coronavirus pandemic that's boosting stocks here. We had a raft of purchasing managers index data from the UK and Eurozone yesterday, all pointing to a tentative recovery, or at least more modest contractions in May than we had seen in April. Stocks in France are up nearly 1.7%, despite the country's finance minister warning today of an 11% decline in GDP this year. Stocks in Germany.
There's no losers today. Like, this is the first time I've ever seen the stock chart
after yesterday's
with this many losers. This is crazy.
In London, meanwhile, are up by around 0.
Well, this is also, I don't know. Maybe I have to wait till the market opens.
I mean, I've been closely following the UK furlough scheme. When does that end?
Yes, Brian. So the UK government revealed today that 8.7 million workers have been furloughed as part of its sweeping wage subsidy scheme. That means that around 300,000 workers were placed on furlough in just the past week. As to when it comes to an end, basically employers have until the end of June to sign up workers to the scheme, but it runs until October. The UK government will be gradually tapering.
That's how you know, boy. Most of the losers are people that ain't on.
And expects employers to start.
That's about to go out of business. What's this one?
To pay 80% of the workers, but it's perhaps a worrying
this one look like a good spot right here.
100,000 new employees.
I don't think I mean, it dropped pretty good. It's an overreaction.
So far, the scheme.
I don't think I get in on it though.
Wages up to a certain limit has cost the UK.
They don't really show me too much. Besides the overreaction. But I need that. I like, you know how I do, man. I love my support levels, man.
On the first trade, including a look
and I
at the
see too much right now.
I mean, I guess I do. Services. That's coming up next.
But there's way too many stocks out here just to be choosing one just to choose them. That's how you lose money. I need to filter these stocks out, man. I don't like these. All right, let's see what we have here, chat. Yeah, I had this mark too, but I wasn't sure, man. I should have set the limit for it, but I didn't. So if I did, I would have took right out. Let's see what I took out at. I would have missed it anyway, cause I would have waited till about right here to take out on that one, which wouldn't have happened, and I would have got rejected. Let's see how far down this one goes. I keep my eye on it. Let me see if I still got that trade for that open. Let me see. I don't know, man. I don't really trust these charts today. I think I gotta wait for people to sell. What's up, Mervin? How you doing, bro? I gotta wait for people to sell on some of these stocks. Now this one right here, on the other hand, look good. Let me see what this one look like. Nah, I wouldn't get in on this.
First trade. Want to mention here that stock futures are actually higher with all of the tumult we are seeing in this country right now. We've got Dow futures up 91 points off their best level of the morning. NASDAQ futures
What's up, William? What's up, bro?
And, S&P futures up 7 points. The coronavirus continues to be a global threat. This we know. Here are the numbers. There are nearly 6.29 million confirmed cases of the virus around the world, which has resulted in 376,000 deaths. Domestically, there are now 1.81 million confirmed cases and more than 105,000 deaths. Anjali Kamlani is joining us now. Anjali, many people understandably very angry about the death of George Floyd, but you say there's also outrage over the racial and wealth gap we are seeing in healthcare services. In fact, you wrote about it for our website. What can you tell us?
That's right, Alexis. It's actually a topic that's been...
Hey, what's up, bro? I'm still okay. How about you? I'm good, man. Just woke up early this morning. You know, I like to trade stocks before I start my day playing Dota. You know what I mean?
And that's where the idea of population health came from, and it's something that the health system at large is trying to...
Right now, all the stocks are going up, which is good. I like that. So I'm going to see what my stocks look like, the trades I have, maybe cash out on a couple of them. And I'm going to wait for everybody else to cash out, and I'm going to re-enter on a couple of them. We're going to see. I got to wait till, like, nothing's going on right now. I don't see no entry, and I don't want to get greedy. So the
densely
only thing I can do at
populated
this point is just
areas,
wait and be
and
patient,
that
you know?
plays a role in their ability to gain access to healthcare services, as well as pay for them, depending on what their jobs are. We know that all the studies we've seen recently have shown that there is a large majority of minorities at large, really, in those essential
Black
service
Lives Matter,
fields
bro.
that are
Hey, thanks,
counted as
bro.
essential
They
workers.
do.
And so all of that is coming together to kind of put a
All right.
spotlight on those health disparities, which we've talked about as it relates to
That's where all
coronavirus,
the good food come
knowing
from,
that
you know?
despite the smaller percentage of the population, there is a larger number of those who are being affected and dying of the virus in those minority populations.
Yes, we have discussed that at length, and I want to talk about what's being done to fix the problem. Are there things that companies, corporate America, the public and private sector are doing, Anjali, to fix the issue?
Well, while there hasn't been any real concerted or universal type of effort, there's what I think some have considered a hodgepodge sort of effect, and that is either looking into the community and getting community leaders together, or having health screenings, say in like a church or in a community center. There is one health organization in North Carolina who I spoke to that was doing things like focusing on food insecurity, and that's a major issue, is making sure that there's healthy food available. So they've set up basically like drop spots where the
Yeah,
local
it was
food bank is helping
crazy for what
coordinate
they
getting
did,
food to
man.
the people in need
There's a big
while
riot
they're
going
under
on
lockdown during the
for all of that stuff.
coronavirus. And then there are others who are focusing on
It's getting
telehealth.
crazy, man.
A startup is focusing on
But you know,
telehealth
this has
for
been
the
going on for
Hispanic
years in
community,
this
because
country, man.
having
A lot of that
Spanish
stuff's
speakers
been
or physicians who are
hidden.
Spanish
The
speakers
only
may
the
be
only reason
hard to
why
find when
this
you're not
protest is going
physically in the
on
building. And so
is
that's something that they've been
because
able to offer.
it's been
And it's been
recorded.
interesting to
This
see,
stuff been going
the
on for
reaction as
years.
well.
That's the thing.
That one company wasn't necessarily able to get investor interest, even at a time like this, because they were considered not a deal, really, as
That's the
a lot
thing,
of
man.
equipment
This stuff been
shipping
going on for
deals in the
years,
market right
man.
now. So very interesting time to see the different efforts. And with the conversation building, we may see more
This is the
coming
page
forward
that I
about
use the
this.
most. I don't
I
really
hope
keep up
so.
with my
Good
personal
insights there,
Facebook
Anjali
page, bro.
Kamrani. Thank you. As states reopen their economies and people begin to get back to work, many
I don't have
challenges
enough love for
remain.
my son,
Namely,
bro.
how do you
I
kill an
understand. You can
potential virus
you can
that's
always
hanging
private
out in
message
the air?
me
One company
on
says they've come up with a
my
solution
Facebook
that
if you
is
need to,
Carrier,
bro.
the
I
air
do have like
conditioning
the
and heating
message
system
button up
company
if you
that, by
can't
the
watch
way,
the
was
video.
recently spun out of United Technologies. Joining us now is Carrier's CEO, Dave Gitlin. Dave, good to
But
have
like
you
I
with us.
said, this stuff been
Tell
going
us
on for
exactly.
years,
I am
man. The only
intrigued by this.
difference
I love
is
this idea. I want
it's
it
been
to work.
recorded.
How exactly are
You know,
you
my thoughts on
improving
all of this,
indoor air quality?
you know, I've been saying this
Well,
for
good morning,
years.
Alexis. Thank you for
If the
having
body
me.
cam's
What
not
Carrier
on,
announced this
then there's no
morning was our
crime.
Healthy
It's that
Building
simple. It's
program,
not that
PAB.
hard.
And there's really
Since
two
everybody want to
aspects
lie
to
about
it. One is
something,
an assessment
then just
piece
keep the
where
body
we can
cam
go into a
on. That way we
building
don't
and
have to
really
worry
assess
about
whether or
that.
not it is a
My word
healthy
against
building and
yours.
it has sufficient indoor air quality. And the second
You,
piece
you
is
say
actually
people in Minnesota is
implementing
not afraid of the
solutions.
virus. Why do you
So
say
there's a
that? What makes you
testing
say that?
phase, and then you can improve indoor air quality through things like filtration. We have filtration systems that can filter out pathogens that are at a microscopic level, the size what you see of the coronavirus. You then want to look at the airflow and the ventilation system within the building, and you look at measuring air changes per hour. And then you can look at things like the ductwork to prevent the mold buildup or bacteria buildup. So we can look at all aspects of the humidity level, the air quality level, the ventilation levels, and look at making sure that we can help universities as they're welcoming kids back to campuses, or nursing homes or hospitals or restaurants or hotels or commercial office buildings, make sure that they can give people confidence to re-enter society, because the indoor air quality is what people would expect. Hey, what does the pipeline look like for projects like this? It's not cheap to retrofit a building, but this is important technology right now to get people safely back into the office. Yes, Brian, there's all sorts of solutions that you can provide. Everything from implementing a fairly specific filtration system, changing yesterday's technology to a HEPA filter or UV lights, or even electrostatic filters. So some of the retrofits or modernizations can be
Hey, I appreciate you stopping by,
targeted
bro.
and very
Like I
much
say, you always
approved, and
welcome to
some can be
private
more
message me.
holistic, where you're actually updating the entire chiller system. So what we wanted to provide customers was with a customized solution specific to
And I
their
have a
ability to
Discord
meet
link
their
as
actual
well
targets that they
if
have.
you prefer to use
Dave, are you
Discord.
working with existing customers, or are you finding new opportunities, new customers coming to you for this kind of service? That's first part of my question. Second part is this just for commercial customers, or can people like myself and Brian someday buy this?
It's both. We're dealing with both existing customers and new customers. We're in conversations with two major university systems today
My
that are
Steam
really asking
friends
us
list
to
is kind
help
of
them
full right now,
assess
buddy.
how can they give parents
I
and
have
students
a
confidence
lot
that
of
they can
friends in
re-enter their
Steam,
campuses and feel
but
good
you know, like I
about
said,
the
you're
indoor air
welcome to
quality
private
that they
message
have not
me,
only in the
or you can
classrooms but in the dorms and their other facilities. So
add me
new
on
customers are
Steam.
starting to
Oh,
reach
not
out to
Steam.
us,
What's it called?
but it also
Discord. I have
applies to
Discord.
residential as well. In our high-end residential air conditioning systems, we have electrostatic filters that can really filter out those contaminants
In
at a very
Discord, you can always
microscopic
reach me on
level.
Discord. I'm
That's in
usually
our
in
offering
Discord a
today.
lot.
We're doing things to improve that offering as well. So
So for
it
some of
applies to
you new
both, and
guys
we
who
can
came
make
into the
sure that you
chat,
and Brian are both very
the
well
market's
supported
going
for your
up
goals.
today, which is good.
Dave, certainly your business is no stranger to
I
many of the
like to,
analysts on Wall Street, but
of
you
course,
guys get
sell
high
when it
marks
goes up,
for cutting a good
but
deal of cost, but also
I'm waiting on
what
some
you
good
like
spots
doing
to
in the
sell at, and I'm
portfolio.
waiting on everybody else
How
to sell
important
as
is
well,
portfolio
so I can buy
management,
on the full
divesting
bets.
businesses don't fit, but also acquiring
So
ones? How important
I'm
is that
waiting on
to
the
your
market to
story looking
open
out
so
over the
things
next
can
few
really
years?
move.
It is important. You know, what we've
Because
said
not
is our
everybody
number
trade
one
pre-market and
focus is on
post-market like I
performance.
do.
So we've said
Because
that the way
pre-market and
investors should think about
post-market is
Carrier over the
volatile, but it
medium
also
term is
moves
sales
slow at
growing
times.
mid-single digits, EPS at high single digits,
So what happens
and
is at
cash flow equal
9:30,
to net
people's money
income.
sink into the
We are
market,
laser focused on
and
just
then that's
doing
when you
what we
start
said
really
to
seeing
create that
numbers move. Like I'll show you
organic kind of roadmap.
what I
We
mean
also
by
said that
this.
we would take a very
So this is
dispassionate,
extending
critical
hours
look at the
trading
current
right here
portfolio that we
on
have.
these
We
two
have
columns.
HVAC, we have
This
refrigeration,
one
we
is
have a
the
fire and
price
security
of the
business.
stock, and this one is
We've
the
said that we
percentage of
would go
move.
through every
You see how slow
aspect
these
of the
numbers move?
portfolio.
It's
And if we
volatile
believe
though.
parts of our
Like they
portfolio are
make big
more
moves, but
valuable
see
in
how
the
much
hands of
slower it
another
is.
company, then we will divest it. And then we've also
Now in
recognized that
about
there's more
7 minutes, you're gonna see something
transformative
different.
type deals that are out there, and we'll look at those over time. But first is execution. Two is look at the current portfolio. One question is, should we sell it? The second question becomes, when should we? You know, we have to look at the right market conditions as well, and we continue to monitor that.
Dave, switching gears here, I understand that your company held a town
I might
hall
not sell
this
this. Let
morning
me see what
with
these
employees
dividends look like.
about the racially charged
Nah, I'm
death
gonna
of
sell it.
George
I'll sell
Floyd
it.
in Minneapolis. Can you tell us sort of what you all discussed and what Carrier might be doing differently going forward?
Yeah, you know, we felt it was appropriate for us as an organization to talk about the reality that we see today. And I think we all watched the killing of George Floyd with horror and sadness. And we wanted to have an ability for there to be some dialogue about that. And the reality is it's 2020. And people look at what we're seeing out there, and that the fact that racism is still so prevalent and is so widespread, not only across America, but many societies around the world, it really breaks our heart. But we know that we at Carrier can be part of the solution. We just released the Carrier Way, which is a foundational statement about who we are as a company. And one of the key tenets is inclusion. So we talked about really leaning forward on recruitment, on promotion, on making sure that we create an environment just like you would want around your family table, about people having the discussions about talking about the soul of a family and soul of a country. We talked about the soul of a company and who are we as a company, and how can we make sure that we create an environment where people can speak their minds, and that we really lean forward and be a really shining example of what an inclusive and diverse culture really looks like.
Dave Gitlin, CEO of Carrier, thanks for the work you're doing, and thanks for being with us this morning.
Thank you, Alexis.
And stay with us. The opening bell coming up on the first trade.
All right, y'all. I don't know what I'm gonna look at yet. Let's see. Mhm. I don't really see nothing on the earnings report. I guess I got to give it some time. But let's see, man. Like I said, the market opens up in 3 minutes. Hey, so for some of you new guys who just came in,
Let's get to Jared Blickery with a look at the markets where we are rallying right now, Jared.
That is
so for
right.
some of you
We
new
have
guys
all
that just
three
came in, like I
indices in the
said,
green marginally. We
pre-market
have
is moving
the
slow.
S&P 500 futures
So
at the highest level since early
I was
March.
showing you
And
guys
just looking
earlier,
at
as you
some
can
of the
see
sectors here
on
on
the
the
right side,
Wi-Fi
how slow it's
Interactive
moving.
financials doing very
I
well.
mean, like I
JP
said, it's
Morgan up
volatile,
1.5% in the
but it's moving
pre-market.
slow.
10
A lot
months
of
over
people
the
don't
last
trade
days.
pre-market.
Value and
I do.
cyclicals
Well,
outperforming.
obviously, if I see the
Looking at some of the
opportunity,
big
I
cap
mean, I can never say no
tech
opportunity.
stocks right here. We have them up
But in
nicely
about
as
3 minutes,
and just in
or
terms of
to be
sectors,
exact, if you
communication
look at the top right
services
corner,
is a laggard right now,
in
but we're
about
looking
two
for
minutes and
healthcare to
20
rebound
seconds,
today as well.
you're going to see a lot of
All
movement in
right, we
these
will be looking for it.
markets.
Thank you, Jared, and stay with us. We have the
So let me
opening
get
bell on
ready.
Wall Street right after
Let me
this
prepare
short break. We'll be
myself.
right back.
So Exxon, I'm going to take profits there. I'm going to ride this one up to about here. Why am I even in this? I might get out of this one. What is this one looking like? Pixie. Sometimes I'll just be I think I'm gonna get out of this trade right here. I'm gonna wait till the market open. I might get out of this one. Pixie, I might get out of that one. What time is it? Okay, we got exactly 1 minute. You guys about to see a lot of movement in these markets today. I can't wait to see this. I don't know how high it's gonna go, how fast it's gonna go. I don't know nothing. I just know I'm ready to make this money. That's all I know. Whenever it hits that mark, you gotta take profit. If you sit there and wait, you're gonna lose. What's gonna happen is if it goes at its highest point that it's been, if 10 people, okay, if it's 10 people total in the markets and the same stock, well, for example, ExxonMobil, right? Genius to the moon. I think let me see. I might be actually I'm in Genius on my other account. You know, I got two accounts. Hold on, let me look. Oh, go ahead. Hold on, I'm about to sell. Hold on, let me pull up my Robin Hood, bro. That's why I love this cat, bro. Run. Well, this cat be knowing everything, boy. Let me go ahead and sell that. I ain't even gonna wait.
NASA is ringing the NASDAQ opening bell today remotely from the International Space Station to commemorate the first commercial crew launch. Pretty incredible. And there you have it from space and from Earth, a new trading day underway. You've got the Dow Industrial starting the day up 130 points. Let's welcome in Paul Schatz now of Heritage
All right,
Capital.
market
He's
time,
president
baby.
there.
Let's
We've
see what we
also
got
got
here.
Jared Blickery with us and Brian Sazi. Good
So I
morning
got
to
this
you
one
all.
ready to
Paul, good to see
go.
you again. I'm going to ask
Smash
you
this
something
down
that's been a
just a
head
tad bit
scratcher for us
more.
here at Yahoo Finance, trying to understand
I'm gonna
why
take
the
profit at
market is so
48.
disconnected from what we're seeing happening in our world
Just
right
keep
now.
coming
We've
up for
got
me.
these
That's all
violent
I ask.
protests going on. The
I should pull
pandemic
this down.
continues
That's a
to
little
be a
too high.
backdrop, even though economies are starting
We'll
to
see.
reopen.
It might
Why
overreact.
is
We'll
this
see.
market rallying in the face of all of that, Paul?
And good morning to you guys. That's the single most asked question I've gotten since probably early April. Why? Why are things doing this when we've got a pandemic, when we've got an economic crisis, and now we've got clearly rioting in the streets and civil unrest? One, as I've said for almost ever, it's not so much regarding investing. It's not so much what the news is. It's how things react, how markets react. So the most bullish thing the market can do is go up in the face of bad news. Why is the market going up? Well, so first, the market is certainly discounting economic activity 3 to 9 months down the road. It used to be 6 to 9, 6 to 12. Things have become more compressed. Market is saying 3 to 9 months down the road, the economy is going to almost go up at a almost a vertical cliff. I'm a little skeptical of that, but my opinion's irrelevant. Market doesn't care what I think. That's why. And regarding the looting and the rioting, the reason the market's not paying attention
Take
yet
profits,
is
baby.
the market doesn't believe it's going to
All right, let's
impact
see what else we
the
got here.
economy nor earnings. If
So
that
one of
changes, you'll
them.
see a very swift change in
What's
market
this one
reactions,
looking
but
like?
just not right now.
Well, do you think the market is setting itself up to be clobbered? If we're looking at 3 to 9 months from now, I don't see how the economy is going to come roaring back enough to justify these valuations. And the fact that the market is ignoring what's happening in this country is absurd.
So you have to be very careful with words like absurd. And I don't want to compare the human plight of the rioting and the pandemic to a financial crisis. But remember, stocks bottomed in early March of 09 and began to go up very sharply. And at the same time, things were really still spiraling.
Yo.
June,
What's
July
up, bro? I'm
of
still
09.
here. Just
So
trying to
do I
cash
think the
out some
market's
of
going
these
to be
things, man.
clobbered is kind of a
You know, when the market
relative
starts
word.
shaking like this, you can't
I think
stand
this
there
is
with
a
your
new
mouth
bull
open.
market.
You're gonna
It's
lose
a
every
bit of a
time.
head scratcher. I think whatever decline we're going to get, it certainly seems like it's in
It's too much
June.
green for me,
I
man. It's
don't
almost
think
hurting
we're
my
going to
eyes.
get a 15 to 20% decline anytime soon, but you take
gotta
everything
wait.
one day at a time. I'm a little concerned that sentiment, which is one piece of the overall market puzzle, sentiment is certainly no longer despondent and panicky, and it's not even neutral. If you look at some of the option numbers, people are certainly getting a bit out over their skis on the option side. However, you look at the B of A institutional survey, and those money managers are still in their bunkers with oodles and oodles and oodles of cash.
I'm so
they
tempted to
certainly
cash
got
out
some
this
cross currents.
Southwest
Price
right
is the
here.
final arbiter. Price hasn't done enough wrong yet to get anything more than a very mild pullback.
All right, guys, we're seeing some big moves in commodities today, and I want to get Jared's take on this. Jared, oil and copper highest since March. We've got the dollar now down for the fourth straight day.
Let me go ahead and sell that then.
That's right. Energy today is the leading sector. We can see that here is ExxonMobil up 1.8% over the last 5 days, going back to last week, up 2.6%. But let's take a look at crude oil. And as you noted, multi-month highs right now. We can see it hit over $36 a barrel, and we'll see that in the intraday price action here. Just going to a year-to-date chart, this is quite a breakout that we're seeing here, testing these levels that we didn't see until early March. And this is based on a couple of factors. OPEC Plus may be meeting a little bit early this week to extend production cuts into September 1st. That would be a big development. They'd set a meeting presumably before then to see if they're going to cut further. But also on the demand side, China really heating things up here. And we can see that reflected in copper futures as well. They are up about 0.5%. And we can see this nice trend line that we have going.
This comes up here, we in there.
Refining of crude
like
oil, so there's a lot of demand for that product as well. And we can also take a look at soybean futures, because we were talking yesterday that China had ordered its state-owned
Just hit my
companies
limit though.
to
It might
not
be all right. Let's
actually
see.
buy any soybean futures.
I feel like I'm
for
being
the
greedy
time
though.
being,
Let me
but
pull this
that's
down.
exactly what they did yesterday. So those fears may have been overblown. And just kind of showing what the situation with China is, U.S. dollar, as you noted, down for the fourth day straight to multi-month lows. And versus the yuan, the dollar is weaker, importantly, coming off of those highs that we saw from last week, the week before. So things are pointing in the right direction here, Alexis.
All right. Thanks, Jared. I want to talk about China in a moment, but first I want to get Paul and Brian's take on retail, because guys, we're seeing a lot of the big box stores and even some small mom and pop shops being looted during these protests in a number of cities. These are stores that were just starting to reopen. And I'm wondering what the impact, Brian, I'll start with you. What has the impact so far been on stocks like Target, Walmart, Macy's, all of those stores, some of them being looted?
I'm surprised a lot of retail stocks have held up as well as they have, Alexis. Just talking to a lot of these retail execs via email, I think they've been shell shocked by the situation, first and foremost. But then secondarily, this has added more uncertainty into a business that has already had a lot of uncertainty in its business for months on end. Target spokesperson wouldn't even tell me yesterday via email they closed 200 stores over the weekend. He would not tell me whether those stores would reopen. They just don't know. And from an investor standpoint, that adds a lot of uncertainty into a business moving forward.
So, Paul, what do you do if you hold Target right now? What do you do if you hold a Macy's right now? Well, they have problems of their own outside of this pandemic and the unrest. But what do you do with retail at the moment?
So retail, in my view,
I'm gonna take profits out of that 213. Just give me that
That's a good
213,
word.
and we out
You have
here.
the have and the have-nots within the retail space. You've got the Costco's, the Targets, the Walmarts that are clearly going to survive and thrive both the pandemic, and they've got the deep pockets to withstand the looting and the rioting. I'm not a retail bull. I haven't been one in a while, but those stocks, given what's going on, are still trading fairly well. You can't just dismiss and say, well, it's rioting, it's looting, let's sell those stocks. Target, Walmart are trading fairly well, and they certainly have the look as if they're going to continue to be somewhat supported by the institutional market.
Paul, you mentioned before there is a lot of money on the sidelines. By my estimation, what I've seen out there, $1.2 trillion in money market mutual funds. Do you think that money starts to come back into the market? What's the trigger point where those longer term investors say, you know what, the market continues to
Came right back down, right?
Just to overlook a lot of the social unrest.
I'm telling you right now,
put some money to work.
And it sold at 1150, right?
Money on the sidelines. Money on the sidelines
That's
is
what I'm saying. It came right back down.
for market. So you mentioned money in money market mutual funds. When you look at cash and other things, some people say it's 3 trillion or 5 trillion. So one you have to remember, not all that money is potential firepower for the market. You've got to figure out how much is out there that investors pulled out and are looking to get back in. I wait after the election of 16. I said, geez, I wonder how long it's going to take. Is it down 20,000, 22,000? Well, the true retail investor didn't really flood in until after the Dow hit 25 on the way up. And clearly there's a lot of money back in the sideline. I don't think you're going to see a flood of money, of that cash powder keg money on the side, back towards the old highs.
Paul, what are you doing with your portfolio with regards to China? So much uncertainty. Just throw that into the mix now that we might have tariffs imposed by the U.S., although the president seemed to back off that the other day. Are you making any changes right now in your portfolio?
Well, I like to think we're always making some kind of changes and trying to improve our position, prune here, add there. I mean, I added some biotech yesterday, which clearly, as they opened today, not so smart of a move. Regarding China, we owned a China ETF until recently. We sold it and we bought Russia. I think the big picture for China is this. I think it's just saber rattling from the president to energize his base as the election season gets in a full swing. I view it as a lot more bark than bite, and I don't think we'll see any serious, significant policy changes, at least until we get through the election.
All right, Paul Schatz of Heritage Capital. Thanks. Always good to see you. Thanks.
You guys too. Take care.
Coming up, we're going to take a deep dive into the earnings coming out of Dick's Sporting Goods, so stay with us.
My mic was muted. What's up, Sun Dragon? Did Valorant come back online? Let me make sure I'm good here. This one look real good. I might just let me just chill, man. I'm gonna sell that right there.
And they are no night light. What night light? $69. There is no night.
I just want to just give me 13, man, so I can get up out of there. That's all I want to do. Get up out of there. All right, what this one looking like? Slow movement, nothing going on. So, GE. I want to sell this one so bad. I don't even feel like I ain't even got nothing worth holding in this one. I'll just hold it anyway. All right, let's see what we have.
We are
Let's
watching
see,
Dick's
Wells
Sporting Goods this
Fargo.
morning after the retailer lost more money than expected last quarter. Revenue and comparable store sales also missed estimates amid COVID-19 store closures. Dick's e-commerce sales, though, surged 110% during the quarter, and the retailer saying the current quarter has gotten off to a strong start. Here to break it down for us is CFRA analyst Camilla Yanuszewski. Camilla, good to see you. I know that you had a buy rating on Dick's before the earnings report. I'm curious if you still have it now.
Sure. Well, first off, thanks for having me. Really appreciate it. And yes, we have a buy
DXC
rating
looking
on
at
Dick's
good
Sporting Goods
profits.
that we reiterated this morning in a $45 12-month price target.
Let's get it.
And we thought the first quarter results were a mixed bag. We
HP
saw
still
EPS
waiting.
miss,
Still waiting.
revenues beat.
Still
And as you
waiting.
noted, e-commerce was definitely a bright
Nerve
spot.
down
And we believe that
6%.
the outlook is
I'll be
optimistic.
alright. Somebody else say
Our
something.
long-term thesis is essentially intact. If you look at the retail landscape right now, we think that sporting goods will fare better than other retailing categories. And that's because we're seeing elevated interest in sports and health equipment, and then also pent-up demand
All
as
right,
these
there's
stay-at-home
that.
orders are
Still
lifted,
waiting, man.
specifically
Still
for
waiting on
outdoor
these trades,
recreation.
man.
Given that Dick's Sporting Goods is really the last man standing in this space, they're really well positioned to benefit from these
Okay, let's see
favorable
what else we got.
dynamics.
Camilla, I'm just going through in my head a little bit what my local Dick's Sporting Goods store looks like. It's gargantuan. There's 2 floors. There's so much stuff on the floors. In this new age of retail, does Dick's
Health
Sporting
and
Goods need to
Corporation.
shrink
Damn,
the
they be doing
size of
these
its
health
stores,
things bad.
given that we may not see traffic come back the way it was?
We actually don't think that they're going to be shrinking their footprint that much. We believe that we're going to be seeing a decelerated pace of store growth with a more of a focus
I didn't get it
on
yet. I didn't get
robust
anything yet today.
omnichannel capabilities to rival Amazon. Right now, their e-commerce, you can get orders within 2 business
Moderna's
days.
coming
We see
down.
it
This
taking
one
it to
showed
the
me
next
that $52
level to
mark.
same-day delivery.
I'll
Also,
hop
we
back
think that
in.
the storefront is actually a competitive advantage to Amazon.
That's when you got
It
in?
gives the convenience of in-store return and exchanges.
I
And also
should
that
have. I
it's
did. I
reduced
had it
in
marked
stock.
too. I had
They're
that
the
thing
last man
marked.
standing. So like Best Buy, consumers like that storefront feel.
Yeah, you say last man standing. I like that because we saw Modell's and Sports Authority have to file for bankruptcy. So in many
First
ways,
in,
they are
first
the
out.
last man standing in this space. But what about within the Dick's business? I know hunting is a big part of their business.
Don't
That's
sell it
under
for a
review
loss,
right
or you
now.
got to pay
What
a
do you
wash sale.
expect on that front?
You got to wait 30 days if you sell
Sure.
it for a
Well,
loss.
we believe that the net effect has been positive, and the decision
That's
to
if you want to
remove
get back in
Hunt
that same
has
one.
generated long-term goodwill. We all know that ESG is gaining a lot of traction, and we think that decision fits very well into the ESG model. Also, on the consumer side, what we're seeing is that a lot of consumers are making purchasing decisions, especially
Damn,
the
I had this
younger
marked
ones,
too.
based on
I don't even
how
remember marking
socially
this.
responsible a brand is. And then there's also the financial side. Hunt is a low margin business, and also the actual industry has been in deceleration for quite some time now.
Camilla, how amazing will the discounts be this summer at Dick's Sporting Goods? I look at their inventory.
This one might do come down. The volume's real high.
Our sales were down 30%. So to me, they do have a little bit of an inventory problem, much like the department stores.
That's a very fair point, and they do have an inventory problem, which was an overhang actually from the fourth quarter. It's going to be a different picture depending on the category. There is elevated demand for the sports, health, and fitness equipment, and that's around 50% of the sales. And then the other side is the apparel and footwear, which there's going to be more challenges on that end. But counties are opening up now. People are going out. They have great private labels. Athleisure is hot, and we think that they're going to be able to work through it.
All right, looking for the sales. Camilla Yanuszewski at CFRA. Thanks for being with us. We are awaiting Zoom Video Communications earnings. They are out after the bell. Here to give us a preview is our tech correspondent, Dan Howley. So Dan, I was just checking Zoom stock on the Yahoo Finance website, up 210% year to date. There are some high expectations for this earnings report.
Yeah, there are. And really what we're looking for is on revenue side, we're looking at 203 million expected. That's compared to last year in the same quarter, 122 million. And then earnings per share, we're looking at 1 cent expected, and that's versus 0 cents in the same quarter last year. Obviously, Zoom has gone through a huge transformation in the pandemic era. They had about 10 million daily active users in December, and then once the pandemic really kicked in, that number was ratcheted up, and it really has to do with the fact that Zoom was so easy
Yeah,
to use
because
for so
I
many
don't got that much
people.
money in it.
They made it basically
Number.
idiot proof, but that
Hmm?
also had its own issues related to security. They actually made it too easy for some people to join meetings, and that resulted in what we ended up calling Zoom bombing, where people who were uninvited to meetings would jump in and say terrible things or post terrible images. They also found that there were issues with their own security on the back end. They weren't doing things like enabling passwords or virtual lobbies that you could screen users who were joining your meetings by default. They also were storing video records in the cloud that could be accessible. And then they were routing some content through mainland China, which would allow the Chinese government to get access to recordings stored there. That was on top of issues, including the fact that they lied about having end-to-end encryption. They are now in the midst of a 90-day review where they are adding security features. In the end, Zoom could become one of the most secure video chat platforms just because of all the scrutiny that was placed on it. They are adding end-to-end encryption. They have enabled those passwords in that virtual lobby, and they do now give the option of routing your content through the country of your choice. But there were a lot of issues for the company in the quarter outside of the fact that they saw that massive growth out of the pandemic.
Dan, is it the single most important metric out of whatever Zoom reports tonight? How many paying customers they have? They've seen a lot of people into the free service, but are they trading these customers up? Because that will ultimately dictate the earnings power of Zoom. But look, not even also Slack. Slack reports earnings later this week. They have seen an explosion in free accounts. They need to be trading these people up at some point.
Yeah, and that's really the issue. I think for Slack, they offered that 40-minute video chat session for free for users. You can have up to 100 people join. That's really what made Zoom made them really attractive. It's the same issue that you see with services, like you said, with Slack, with any kind of software as a service with a free offering to get people in the door and entice them. They really do have to try to move those people over to paid accounts. And as you said with Slack, that seems to be their biggest issue. They can report as many users as they want, but if they're not getting those customers to pay up, then it doesn't really matter at the end of the day. That's
I just want this to hit 213. Come on, man.
Subsides at whatever point, and we start to see even more people go back out and try to live their lives as best as possible, the number of users on those services will inevitably drop at some point.
All right, Dan, stick around. Because coming up next, we're going to take a look at Facebook. It is coming under fire from its own employees. We'll talk about it next. Facebook CEO Mark Zuckerberg will reportedly hold a town hall meeting with employees today as anger grows inside the company over Facebook's hands-off approach to President Trump's recent posts. Our tech editor, Dan Howley, back with us for this one. So, Dan, what do we expect Zuckerberg to say today?
He'll probably basically reiterate the kind of stuff that he has said in the past about this, about how he was, disgusted by the comments that President Trump made about when the looting starts, the shooting starts, and what it comes down to is what kind of action he will actually take, rather than paying lip service to what his employees want to hear about. Basically, this was the company's moment to kind of stand on itself and say, look, when Mark Zuckerberg told Congresswoman Alexandria Ocasio-Cortez that he would make moves to remove posts that could glorify violence, even if it was from elected officials, he would. Obviously, he did not do that. And we've seen, as a result of what President Trump posted, kind of the real world effects of that last night, actually, out in front of the White House when peaceful protesters were attacked. So this is something that I think Zuckerberg is going to have to answer to on multiple levels from employees. We're already seeing there were protests yesterday, virtual walkouts, people saying that they highly disagree with what's going on there. And it is becoming more of a normal kind of fixture of Silicon Valley where employees are able to express themselves and walk out. We've seen it at Google before, as well as Amazon, but to a degree. Facebook, this is the first time we've seen something so widespread and so serious as this, where Mark Zuckerberg personally has to make a comment to the company itself and kind of quell any unrest inside.
Now, Dan, it's one thing to protest, but do you think we're at the point where some of these Facebook employees say, you know what, we've had enough of this, this stance by Zuckerberg and the management team, and leave, and they take their employment and their services elsewhere?
I think that's a real possibility. They are a company that is obviously well-paying, and they have people that will sign up for a job there on the dotted line, because it then opens them up to more opportunities across the board. But that being said, it is a competitive marketplace for employees at big tech companies like that. And they do have a couple of rivals right down the road in the likes of Google, in the likes of Twitter. They have, again, Amazon, which has a spotted pass as far as employee dissent, but Microsoft as well. And there's, myriad companies around the valley that they would be able to work for that may allow them to better express themselves or align with their own personal feelings on the matter. So I think that when you look at something like Facebook and you look at how Mark Zuckerberg has to reply now to employees, it really does say, look, this isn't a given that they'll stick around.
All right, Dan Howley, thanks for the preview there on that Facebook town hall. Let's get a check of the markets now with Jared Blickery. And Jared, I see
that's what I'm working on right now.
Lower right now.
Yeah, just
securing
a little bit lower.
profits.
Those FANG stocks really underperforming right now, but the Dow is up, let's see, about 122 points. NASDAQ, as you noted, down about 18 basis points. S&P 500 up 18 basis points here. Just checking on the year-to-date price action. We're right up against last week's highs.
I'm working on that right now, man.
And we are testing the highest levels that we've seen since early March, something that we've been
trying to get this one right here to hit 4760.
Well. Let's take a look at our NASDAQ 100 heat map. There are those FANG stocks. They're all in the red to the left of the screen. Chip stocks, kind of a mixed bag. NXPI happens to be the leader, but we can see NVIDIA and AMD under a bit of pressure. Dollar Tree is actually the leader now, up nearly 3%. Also, travel stocks doing very well today, bouncing back along with those cyclical and value stocks. American Airlines in the green, United up 1.7%.
Did you take profits on Genius?
Yeah. Up 2% as well. Here's a look at the Dow, and we can see, other than those big cap names, JP Morgan leading the financials, up 1.7%. Goldman Sachs.
That's what I do, man.
2% as well.
I'm just gonna take profits and get back in later. That's all I'm doing at this
over
point.
The last 3 days, up nearly.
The only trades that I'm not gonna do that on is oil. I think I'm just gonna leave oil in there and just forget about it. You know what I mean? That's the only one I'm just gonna leave in for the long run.
All outperforming the S&P.
That was more like an investment for me.
Communication services weighed down by Alphabet and Facebook. That is the biggest laggard, along with real estate and healthcare. And then just looking at our leaders, let's go back to the beginning of this rally.
Shouldn't have. 13 days. I didn't have that many stocks in it. You know, like I didn't bought that many shares in it.
That is
That's
nice
why.
Gain. Year to
Like
date,
them
the
small
S&P
ones, I don't be
500
buying my
recovered
shares on. I
about
just
all
take
of their
like
losses, but
this
still looking to take
GE.
out those
I bought
Asian
this one a
players.
long time
All in
ago, but I
all,
only
a
got
nice
10
day
shares, so
today, Alexis.
you know what I mean.
Say
Like,
so. Thanks,
ain't even
Jared.
worth
I want to bring
me.
to your attention a
You know
tweet
what I mean?
from
Like, it
our
ain't really too
president
much
just
worth
moments
me
ago.
doing anything,
Donald Trump
really.
saying that D.C. had no problems last night. Many arrests. Great job done by all. Overwhelming force. Domination. Likewise,
Just look, y'all.
Minneapolis
Look at
was
all this.
great.
Look at all
Thank
this
you,
percent
President
of
Trump.
return
And
on
as we've been
investment.
talking about
Your
all
boy,
morning
your boy
long,
don't play,
stocks
man.
seem to be ignoring
I
what is
do more than
happening
just
on the
play
streets of
Dota. I'm
America,
telling
as we
y'all.
just heard from Jared
I'm
Blippery.
telling
Stocks
y'all. Y'all know I'm a
overall
good trader when I
looking
don't
pretty
have a
nice for
stop
early going on this
loss.
Tuesday. Stay with us.
I
Lots
don't
more
use
with today's
stop
trade to come
losses.
right after this.
That's how you know you're a good trader. Know what I mean? Waiting on this one right here. Matt, man, you gotta join the call sometime, man. You and Ron. Let the world know how smart y'all are with these markets. Damn, Google. These cats ain't playing, boy. I ain't messing with these cats. Am- Amazing company. Y'all know me. I love support and resistance.
All right, welcome back to the
It's
first
just so
trade. I
good
am
to
Tony
me,
Caruso,
man.
my
Like when
co-anchor
I
Alexis
trade support and
Christophers, and you're
resistance,
watching a market
it's
completely
just so good
detached
to
from
me,
the
man.
realities sweeping America. The Dow is up more than 140 points, driven by in large part by a lot of momentum traders. But let's get right to Inez Ferre, who's watching some specific stocks this morning. Inez?
And Brian, this morning we're watching MoneyGram up more than 35% after a report that Western Union is reportedly seeking to buy MoneyGram, with Bloomberg reporting that Western Union made a bid for MoneyGram. The money transfer business took a hit during COVID-19 as many of its operations around the world had to be temporarily shut down. But if you take a look at these stocks, Western Union right now up more than 12% after this report also. Also taking a look at Dick's Sporting Goods, that stock is up more than 2% today after reporting its quarterly results, with same-store sales for the first quarter
Hey,
decreasing 29.5%,
I'm trying to figure out what Snap
driven
was,
by
man. The only
temporary
thing that
store
comes to my mind is
closures.
food stamp.
E-commerce, though, grew 110% year over year. That's including its new curbside
Snap
contactless
is
pickup service.
$19.
And then just taking a look at Bank of America, that stock is up more than 2%, with the bank announcing today that it is making a
This
$1
one is
billion
moving.
four-year
I ain't
commitment
asked for much on
to
this
help
one. Just give me
local communities
213 and I'm
address
out.
economic and racial inequality accelerated by the pandemic, with CEO Brian Moynihan saying that the events of the past week have created a sense of true urgency that has arisen across our nation, particularly in
Just
view
give
of
me
the racial
213
injustices
and I'll get out
we
to the
are
house.
seeing.
Come on,
Areas
Alibaba.
of focus for this aid will be in health, jobs, training, support to small businesses, and also housing. Brian?
All right, thanks, Inez. Let's stay on the markets here with Mitch Rubin. He's the co-CIO of River Park Capital and portfolio manager for the River Park Long Short Opportunity Fund. Mitch, good to see you. I think we have arrived to the conclusion that we know why the market hasn't gone down because of the social unrest sweeping the country. It's Fed liquidity. But do you think we're at that point where investors need to take a step back here and realize that this is also an economic event and it might be a good time to take some profits?
Yeah, I think the market's at a point of just heightened volatility for a host of reasons. Whatever reason may dominate the news on any given day may change tomorrow. So the social unrest kind of came out of nowhere, as most black swan events do, but we're still sitting in a market that, as it looks forward to 2021,
Look
22,
at
is
that
dominated
bullish
by
candle.
emerging markets, is
Just
dominated
go
by
ahead and hit
equities,
213 so
by
I
the
can go
Fed,
out about
by
my
e-commerce,
business.
and businesses that are marginally getting better, not worse. And that's an environment where stocks don't generally correct and test the low without some other negative catalyst that we think is going to impact future earnings. And social unrest, as disturbing as it is probably going to be a short-lived event.
Mitch, I know that your fund has been outperforming the overall market by quite a bit. I'd love to know what you are invested in at the moment. What are you overweight? What are you staying away from?
Yeah, so we're research-driven long-term investors, but the product, one of the products we run is a long-short equity fund, and that fund has a dual mandate. And our goal is to be equity investors and create long-term equity returns, but it's also to protect capital and manage through volatility in down markets. And so, right now, one of the reasons we've profited so well this year is because we've been long secular growth businesses with great balance sheets. And on the short side, we shifted from being short energy services into travel and retail and consumer discretionary. And then, maybe most importantly, we covered a lot of our shorts at the bottom. And so right now, the fund has a long bias to the market where we're still long big cap tech stocks whose businesses are thriving. We're long payment businesses. We're long select cloud software companies. And we're long some traditional businesses that have pivoted well.
Skeeter
Nike,
making big plays in the market.
yeah,
Yeah.
that we think in the long
I got a couple of cash out ones waiting on me right now.
on the short side,
It's Alibaba. I got it at 197. I'm just waiting to hit 213. I cash out on that one. Exxon Mobil, I got in at $39. I'm waiting on it to tap 47. I'll be out of his way too. Just waiting on these two right now. I don't ask for much. Just $1 million. I ain't much. The market got more money than that.
Select telecom companies, and so there's in any market there's still plenty of things to be long and short.
Mitch, you mentioned the lows several times.
How you doing today,
Is
Brandon?
it really realistic, even if we do get a second wave, given the stimulus we've had put into this market?
I'm waiting on the stimulus check though. They playing with me now.
New lows you're looking for.
I need more money for the
Well,
markets.
we don't have a short-term market outlook per se. I think what we look at is what are the possible events, not just the foreseeable events, but the unforeseeable events. And the March low was created after a very strong year last year when something came out of nowhere. And it wasn't the disease that affected the economy and markets. It was our response to the disease, which has never happened before, which is basically locking down the world economy. And that kind of uncertainty, not unlike the great financial crisis, it puts things
I'm
on the
back.
table that
What's up,
can't be
man?
normal discourse.
Just patiently waiting on some numbers. I cashed out. I think I cashed out about one of them. I don't remember how many I cashed out just now. Maybe one or two stocks. I can't remember. But I'm waiting on this one right here, Alibaba.
Certainly, this is
I got an Alibaba. Let's see, May 1st. I could have been sold it. Well, I had multiple shares though. That's what it was. So what I did was I bought some shares at this price, and then I sold some of it up here. But I kept one of them, and then it came back down, and I bought in again on this line right here. And now I'm about to sell right here at 213. I could take it up here.
In addition to
But
U.S.
I don't want to get
equities,
greedy. You know
are
how
you
I
looking
am. I don't like
outside,
getting greedy.
perhaps to commodities or even other equity markets around the world for opportunities?
I like to trade support and resistance, so that stopped me from being greedy. When they come out with the cure for coronavirus, then I'll invest. Until then, I'm playing around.
Whatever the market may trade at on next month or last month or next year's earnings isn't as interesting to us as what will individual companies earn in the future and what's a reasonable multiple to pay for those future earnings, and then relate that to today's stock prices. I think as a whole, when you look through the market, there are businesses that are massively overvalued still and massively undervalued, even if they may look expensive today. And that's because there's these very significant forces of creative destruction that are favoring some businesses and challenging others. And that wave of disruption is ongoing even with COVID.
Mitch, you characterize the protests that we're seeing now as a black swan event. Where else do you see black swan events? Do you even think about that as we go into the summer, which could be pretty volatile?
Yeah, I mean, by definition, unforeseeable events are unforeseeable. And so what we try to predict in the future is the earnings of a business that we have a high degree of confidence in because there's an underlying secular trend to the business. We don't try to make a call on where we are in the economic cycle, what interest rate policy may be in the short term, what politician might win an election. And we think those things are researchable. And if you're patient and thoughtful, when those black swan events, you can buy unbelievable businesses when they're at a discount. And then hopefully your short book is filled with businesses that aren't attractive because they're undergoing some threat. And those businesses tend to massively underperform in a dislocated event. And that's why in a long short fund, you have that ability to be prepared for an unforeseeable event, even if you don't predict the event itself.
Mitch, how are you thinking about China-U.S. relations as you look at your funds portfolio right now? Are there things that you are staying away from because there's just so much uncertainty regarding that relationship?
Yeah, we've always been very wary of investing where the U.S. rule of law, where GAAP accounting, and where the U.S. dollar aren't all things we can underwrite. There's tremendous change going on in China that creates enormous opportunity, but it's a very different system of law, system of accounting, government control of businesses. We generally have stayed away from Chinese listed or even Hong Kong listed Chinese companies. We look for businesses that have enormous Asian growth opportunities. So for example, Disney building parks in Asia, Nike selling its equipment and shoes into Asia, but we don't own specific companies that are governed by Chinese law because that's not a law that we feel, even though I went to law school, that's not a law I know how to underwrite.
All right, we'll leave it there. Mitch Rubin, co-CIO of River Park Capital. Good to see you this morning.
Great, guys. Thanks a lot.
All right, do stick around. Much more ahead on the markets on the first trade. Welcome back to the first trade. We're watching food delivery platform DoorDash and ride-sharing apps Uber and Lyft as these companies are suspending services in cities across the U.S. to comply with local curfew orders. Inez Frey is back with the details. And as the worrying aspect, at least from an investment standpoint, these companies are already not making money.
That's right, Brian. And we went through COVID-19, and now with these curfews, they have to comply with these curfews in the cities where those have been instilled because of the protests. Lyft says that it is complying with curfews and local directives. If you can take a look right now, a Lyft stock is just up 0.3%. And Uber also has suspended services during curfews in LA, Oakland, San Francisco, also part of Minneapolis. And in a statement, Uber said some cities have requested that we suspend operations completely, while others want to ensure that Uber is available for essential workers. So the concern is that essential workers would be able to get around during this period. Also, it went on to say, we're also using the Uber app to educate riders and drivers about city curfews and remind them Uber should only be used for emergency purposes only during this time. And just looking at some of the cities that have instilled curfews over the last couple of days, New York being one of them, Philadelphia, Washington, D.C., Atlanta, Detroit, Phoenix. So quite a few cities that now have curfews because of the protests. And so these companies are complying with directives, and in some cases telling people only use this if an emergency or if necessary. And in some cases, the local directives are please keep them going for essential workers.
All right.
All right.
Thanks. Alexis?
Yeah, thanks, Brian. We've seen civil unrest take hold in our nation throughout our country here, and the market seems to be, by and large, ignoring it. We see stocks have been rallying the past couple of days, but there's a note out from RBC that says it may actually have a direct impact on the stock market. Sabine Marcellus has been checking this one out. And Sabine, what are some of the big takeaways from that report?
That's right. So according to RBC Capital Markets research, they found that the effects of the civil unrest could be a potentially negative development for stocks for three reasons. Number one, we have a headline-driven market. The S&P 500 is highly sensitive to news developments. We saw that in February and March. We got negative news about the coronavirus. Also, we got the negative economic impact of the shutdown, and we saw the S&P 500 fall steeply. But then in late March and April, we had some optimism, some good news about vaccine and treatment developments, reopening of the U.S. economy, several different states, and also we had some good news overall. So because of that, we saw the S&P 500 rally. Number two, this is the second reason why RBC Capital Markets thinks that the civil unrest could hurt the stock market, is because it could trigger a second wave of the coronavirus pandemic. And fear of a second wave could cause the U.S. economy, plans to reopen it, to be shut down completely, and that would have an even more negative, devastating financial toll. The third reason is because consumer confidence could be hurt by the civil unrest. Consumer confidence fell steeply in March and April, but it rallied a little bit in May, but that may be jeopardized with further civil unrest. And not just consumer confidence, but also corporate sentiment and small business confidence.
And Sabine, just staying on the topic of consumer confidence, we're seeing Walmart and Target continue to be impacted by this.
That's right. So we saw these major retailers, Walmart, Target, Apple, all start to reopen their stores, trying to get business back to normal. But because of the civil unrest, because we saw storefronts shattered, business property destroyed, they've limited store hours, and they've also closed hundreds of stores.
All right, we'll leave it there. Sabine Marcellus, thanks so much. And a programming note, this afternoon, Yahoo Finance is airing a special broadcast, 2020 America Divided, at 4:30 p.m. We will focus on the protests and COVID-19 pandemic and how they are impacting the economy and our country. Guests will include the National Urban League president, Mark Morial. Stay tuned, much more ahead on the markets on the First Trade.
What up, chat? I am back here ready to trade Alibaba. Alibaba is sitting at 211. Oh, so, okay, 212. Okay, 211. Oh, Oh, well, all right, $212, and I just needed to get to 213, and I will take profits. Y'all heard that? That's my exciting voice. That's the sound you hear when I'm starting to make money. Sometimes I like to talk. All right, let's see what we got here. Sometimes you gotta be patient in these markets, man. That's the thing. You gotta be patient. If you ain't patient, you're gonna get got. Alibaba, so close to taking profits, baby. Just so close. Like, no, this should take profit today. See, it be them other lines that's hard to pass, but this one should be fine. I ain't aiming that high for this one. I just want to get in and get out. Take profits. Let me check my Robinhood account, y'all. Make sure I'm good on that. Cause I got different stocks on that one. Ooh, profits. Ooh, profits.
All right, welcome back to the first trade. While investors are concerned about the global economy and civil unrest, gold is shining surprisingly,
Hold on,
nearing
let me
a
show y'all what I
52-week
looking like.
high. Will Ryan, Granite
Let me
Share
see.
CEO, joins us
Hopefully
now
it's
to
still
discuss.
marked.
Will,
Boom.
it's a bit
Look at
weird
this
seeing
right here.
gold hovering where it
This
is,
is
and you
on
have the stock market rallying
Bloomberg
too.
oil.
Which asset class is correct?
Bloomberg crude oil. I got it at $21.
I think
It's
actually
sitting
the
at
answer is that they're both correct, and that is they're
$25.67,
both
68
asset classes that are responding well
profits.
to
You know
the
what I mean? You
fiscal
just
and
gotta
monetary
love it.
stimulus
Profits. That's
programs
just
that
on my
have
other
been put
account.
out,
That's why I
since the
had to
COVID
manually put the
crisis
green
in
line in there.
mid-March, and this is, if you think about it, the
Also,
exact same
USO,
playbook
I
that
got
we
in at
saw in
$20.77.
2008, when
It's
after the
at
financial crisis we saw
$26.70.
similar,
Profits.
extremely
Profits
high
right here. This is the one I
levels of
told my daddy
stimulus
to get in
flowing
this
through the
one. He
market,
got in.
which
He should be
benefited
eating
both the
now.
stock market and gold, and that's what we're seeing right now.
I should call him right now and tell him to buy me a Lambo.
We're
I got
seeing
him in profit.
gold's trading pattern this past month. Investors continuing to come in and buy on the dip. Is it at a
Oh,
point
look
now
at that! I
where
told him to get in
those
on this one
wanting to enter
too.
the gold market have sort of
I
missed the
got in
boat?
this one
Because
kind of
for
late
some,
though,
they're
because I
saying
had
the
to do some
position is
research on
too
this one. I
crowded
looked at it at
and that
35,
prices are too
but I had
high
to do some
right
research,
now
man.
to
You can't just
recommend
be getting
jumping
into
in
all
at this
kind of
level.
stuff without doing research. That's
Well,
another
I would
thing. It
say that we
depends.
definitely
Like if
haven't
you know the
missed the
company, like
boat.
obviously something like
From
Walmart, you
my
know they ain't
perspective,
gonna go out of
go all the way
business,
back
or
to
you know what I
1980,
mean, like
which
companies like that,
was the
McDonald's. I mean,
previous
you just know
high
they're not gonna go out of
before
business. But when
the
you hear a
high
new
that we
name, you
reached in
gotta do your own research and figure out what's
2011.
going
And
on,
in 1980,
or
the
you're
gold
giving out
price
free
reached
money. And if you're giving out
$800 an
free money,
ounce.
you
And
might as well go ahead
inflation
and send me
adjusted,
that
the
money so I
price
can
is
put it in
about
the markets for you.
$12,000 an ounce today. So a lot of people
But anyways,
look at that and
I got
refer
on
to
this
that as
one.
being the all-time high of gold. And obviously on that basis, we're
This
nowhere
was another
near
good one I got in on.
$2,500
$37.
or
I mean,
that
I
rate
should have got
about
it at
today.
35, but I got
The
it at
other, of course, is in
37. It's at
2011,
40,
the
so
all-time
profit.
high for gold, the nominal all-time
Profits,
high was
baby.
over
Let's get it,
1900.
man. Like we out
Remember,
here catching
gold
the
hasn't
profit train.
gotten back to that level
You know what
even
I'm
right now.
saying?
No,
What's
we
this
are
right here?
obviously
ExxonMobil.
on a sort of multi-week
Still waiting
high.
on my
And so from
40
that
cent.
perspective,
Just
it's
give me
not like
40
other
cent.
asset classes that
And
are
I get out your
trading at
business
or
on
near
this one.
all-time highs. That gold still is actually
By
below that
Alibaba.
all-time high. So
One more
it's
cent.
starting to
One more cent. Just give me that one more.
The rally in
Oh, it
gold
went down. See how they do?
is the read through there a
See, this is
lack
why
of
we doing that Black
confidence
Lives Matter
in the
movement
U.S.
now. They
economic
ain't trying to give me
recovery
that 1
after
cent.
COVID, and
They got to
even in
that
light of the civil
99
unrest we're
cent in the
seeing in the
stock.
country?
I think it's a little bit, but I think the much bigger story here is
Hold on,
really those
let me see,
two
man.
kind of
Let me zoom in a
fundamental
little closer.
drivers that are moving the gold price upwards, and I would expect this to continue over
Did
the
it
next
tap
few
that
years.
line?
That is
I don't
the
know.
huge amount of fiscal and monetary stimulus that we're seeing putting in the market. And what that
Executed. Yep.
does
They got
is
executed.
increases
Yep.
the
I'm out this
supply of
trade.
dollars in the market.
Let's get it,
All things being
baby.
equal,
Already
when
in
the supply
profit,
of dollars
man. Making
increase,
my
the
parents
US
proud
economy,
out here.
the casualty is the US dollar.
Executed. I
So
had to
people are
check in case
betting
y'all was
that
wondering what I was
what all of
doing.
this
I'm
means
selling that
ultimately is a weaker
at
dollar,
213.
and gold is a beneficiary of that. The other thing that's happening, of course, is that interest rates have gone
That's
to
a
zero,
crazy trade
and
right
now some
there.
people
I'm
are
out.
expecting
I'm
the
out.
market interest
See,
rates to
you
go
can't stay
below
there
zero,
long. Are
and
you
we'll
giving
have
up free
negative
money?
rates here in the
You
US
gotta
for the
take your
first
money
time
back,
sometime
man.
over
Like
the
you don't
next
want to
12
give up
months.
free money in these
So
streets,
that's a
man.
very clear correlation again with gold. So typically,
Let's
when
go.
interest rates fall, gold
Out
prices
here making
rise
money on
because the
accident.
opportunity
You know you
cost
good
of
when you're making
gold
money on accident.
is much cheaper. So those are kind of
How
the
many
two
trades that got out
and
today.
then sprinkle in, geopolitical tensions and civil unrest, etc., on top of it, and you get a cocktail which really stands
Hold
out.
on, did I get out of Southwest? Let me check that.
You know, outside of gold,
Which
we're
one was
looking at some other
Southwest?
precious metals. Silver has had a really nice run. Copper up 20% recently. Do you think that those metals have sort of
Southwest.
reached their tipping point, or is there further to go for silver and copper?
Oh shoot, I got out of this somehow.
Can benefit in this.
Oh, I might have hit my target. Let me double
whether you're
check.
talking
Hold on,
about
y'all.
silver, whether you're talking about platinum, copper. I mean, copper maybe to a lesser extent because it's much more.
It's showing that
advanced
bag
and
sign.
precious. But
Oh, you know what? I had a line right
when you
here.
see an
So I
environment
got out
where
of this.
prices are rising,
Southwest executed.
typically
Yep,
you see
at
silver
34.
prices rising as well, albeit with a bit more volatility.
At $34.
So I think
Yep.
this is the kind of
Yep.
environment
Yep. Boom. How
where
many trades I
people
got
reach
today? I
for
got a
hard
1,
assets, where
2,
you
3,
see,
4 trades.
potential
Alibaba.
inflationary policies, weakening of the currency,
Iron Mountain.
interest rates going to zero. So
That
people are
Pixie
looking for
trade
those
in
volatile
Southwest.
stocks and
Boom.
bonds,
Let's
and
go,
that's where hard
baby.
assets typically
I got
come
too
in.
much money sitting around now, so I got out them trades. What that mean, y'all? That means I need to get in more trades. That's all that means. I'm holding on to money for no reason.
It sounds
Let's
as
see
though
what this
you're
one look
looking
like.
for a potential, maybe an inflationary spike at some point.
If this
this
one
year.
hit that 60 cent, we out
It's not
there.
something that I think is probably
I
likely
need to
this
find a new
year,
trade to
but
get in now. I'm
certainly
bored already,
the
y'all.
difference between this time around and 2008.
I need another place to give up my
is
money
that,
to.
You know, in 2008, although we had stimulus, what we had was a stimulus in an environment where, from a fiscal perspective, you had some austere or policies of austerity. That's not going to happen this time around, and that's not what's happening. There's no political party that is minded to put out any kind of austerity measures at the moment. The median voter in the US has swung to the left, and both sides of the aisle are in favor of stimulus. So we're going to see more stimulus, we're going to see faster stimulus and higher stimulus, and that, unfortunately, will not be great for the dollar and for paper currencies around the world.
Well, for people who want to get into gold right now, you have your purists out there who say, actually hold the tangible asset, bars of gold. What's your feeling on that? What are some ways that people can get into gold, and is holding the physical metal perhaps the best, safest way to go?
I think that holding the metal or buying gold directly.
I might sell this right here. I'm trying to
form
see
via
now.
coins,
In
that's
case
the
y'all
most
wondering what I'm
popular way to
doing.
do it.
Sometimes I gotta
Certainly
draw
there's
my
nothing wrong
lines and
with
just
that.
stare at
My
it for a
only
little bit
caution
and
to
just
that, and obviously my own bias
ask
here,
myself
I run
why
one of the
here, you
largest
know.
gold ETFs, BAR.
But I think this is the moment where I do it.
Typically, it's
Let's
not
do
good
it.
from an investment perspective. So, from an efficiency perspective, what people are
So I'm
really
gonna do, I'm
looking
gonna
to
put
do
a
is they
sell
want
limit
to
order.
invest in the
That's
gold
what I'm doing
price.
right now,
So
y'all.
they want to buy
This is
access
Wells
to the
Fargo.
gold market, and they want to track the
Sell
gold
limit
price
price
up or down.
$28
And so
and
gold ETFs
20
are by far and away the
cents.
most efficient way to do that. Typically, when you buy physical gold in the
Place
form
order.
of coins, you're buying at a premium, typically a large premium to the spot price. And that is a factor of the
So
markup
now you
that
see that little
mints
orange
charge
thing
the
right here,
dealers and
whatever
the
color
dealers
you call that
charge the
gold.
underlying customer.
So if the price come up
So
and
it's
tap that
a really
line,
nice
I'm
thing to
out.
own, but it's not the most
Don't stick
efficient way to
around. I'm out.
invest in the market.
Will, I have 15 seconds here. You did mention you oversee ETFs. Where do you go? Is it the GLD or the GDX? GDX is the miners. They have been outperforming.
When the market rally like this, man,
Yeah, so
you got to get in and get out. You can't stand around beating off, man, because everybody else getting out. And that's going to leave you holding an empty bag.
Our gold ETF, which is very similar to the other one you just mentioned. But to me,
Look at this one,
they're two very
DXC.
different things. So
I'm
people
already
looking
up
to
9% on this
get
one.
advantage or
Near
want to take
9% on
advantage
this
of the
one.
gold price. You want to be in the physical
Oh,
gold.
shoot. Let's
But for
see.
those
Let's
that
see.
think
Let's
that the
see.
gold
Let's see.
mining stocks will outperform,
Let's see, baby.
then
This
there
is
are obviously
a.
ETFs like the GDX that you mentioned that you can play it as well.
All right, we'll leave it there. Will Ryan, Granite Share CEO. Always good to see you. Have a good rest of the week.
Thank you.
Appreciate it. All right, do stick around. Much more ahead on the markets on the first trade.
Set me a sell limit at 17.25. 17.25. Good till cancel. Place order. Alright. So it's another one I got set up. So if this come up here and tap that 17.25, I'm gonna pay rent again. I gotta pay rent, man. Alright. What's this one looking like? I'm already out this one, right? I already got a limit on this one. What's that called? Open order. Okay, that's what that O is. So I got open orders and all that. This one I already sold. AMD. What's this one looking like? $56.68. Go ahead. I'm gonna hit my limit there. 56.68. Place order. All right. What's this one right here? Okay, so y'all want to know what I'm doing? I'm just setting up limits. So when it hits that line, that goal line I be having, that'll take me out the trade and give me the profits. That's all that's doing. But y'all always hear me say it, man. I don't want to get caught holding an empty bag when the price go down. So what's gonna happen is it's gonna come. See, like imagine me being in this same trade I am right here, right here. So what happens is it's gonna go up, hit my line, and come back down. Like if you don't take profits here, you could be holding an empty bag right back where you was at. So what you want to do is you want to go up, empty the empty bag, and then take it down, fill that bag back up, come up, empty the bag again, come down, fill it back up. Same thing all day, baby. Support and resistance. That's all I'm doing.
Operations in U.S. stores. In many shops, it operates as drive-through, delivery, or takeout only. And it's unclear right now when the sit.
See that right there? See that money bag? That means your boy ain't in there no more. He out. I ain't in that trade no more. I'm out.
Flat right now after Stitch Fix
money bag. I'm out that one too.
1,400 stylists in California. That's about 18% of its total.
I'm gonna hold this one and see what happens. I'm gonna wait for it to make a reaction. I don't know where I'm gonna sell that at.
Customers. The company plans to hire about
okay, so my next trade is this one right here.
Like Cleveland, Minneapolis, and also Austin at the end of this year. And going
I just need 40 more cents, and I'm out this one right here
taking
too.
a look at Cisco, that stock is up 0.6%. Cisco postponed its virtual Cisco Live 2020 conference because of the protests that are going on nationwide. In a video statement, CEO Chuck Robbins said, in the light of what is happening, that the events and the turmoil that's happening, we feel that this is the right thing to do. He also said that the company is donating some $5 million to charities focused on fighting against discrimination. And a new date for that video conference will be announced later in June. Brian.
All right. Thanks, Inez. We're always looking to collect data in some form or another, whether it's trying to get an edge on a stock or taking pictures of your family so you don't forget precious memories. We're always on the lookout. But all that data is leading to soaring energy use. Yahoo Finance's Akiko Fujita is here with the latest installment in her series on climate change. Akiko?
Yeah, Brian, this is something that a lot of us, I think, can relate to, having our smartphones, having all that data on it. But we don't often think about the ramifications of that. Now, whether it's AI or 5G, the amount of data that's created is expected to increase dramatically over the next several years. That's only going to exacerbate the challenges that tech companies already face. How to reduce the carbon footprint of the data centers at a time when demand for those centers is only going to grow.
All right, let's see. I got out. I got extra money. That's all that means. Let's get some more trades, baby. Let's see.
Photos, especially those you haven't touched in 10 years. Then there's everything on your smartphone.
What's the day today? Today is Tuesday. It's still early. It's still early.
It all amounts to
I like to get in before Friday, you know?
See, that's right.
This is crazy right here.
So vast, it's roughly 45 times the amount of grains of sand on the Earth. And by the way, that's expected to increase 5-fold in the next 5 years.
It's dramatic.
Damn, man. I wanted to buy some more Bank of America, but it's going up, man. I mean, I bought some. You know, I got to buy it now. I'm still going to buy it. See, I bought it coming down because I wasn't sure. But good thing I bought it. But still, man, like, I want to load up the bag right here, yo. Like, I bought about 58 shares. And I want to come down here and buy about 100 more shares right here. If it came down here, buy another 100. Just take that baby up. But they got me, man. They caught on to my scheme.
All of the electricity comes
They
at a
count onto your
cost.
boy's scheme,
3%
man.
of the world's energy, to be
Alright,
exact.
next up.
That
That's how
means
that
a
is.
lot of pollution. Putting tech on par with the airline industry in the amount of CO2 gas it releases.
Everything that's happening on the internet requires some energy to generate the data, to capture the data, to store the data, to compute the data, to push the data back out.
At Switch in Las Vegas, construction crews haven't stopped building out its data center since 2007. It's one of the
Damn, PFE is moving now.
million square feet.
As we are creating and generating more data, and we have more and more need for servers, it's creating a need for more and more.
Alright, give me something to look at, Stocks. Give me something to look at.
A server school. That's forced them to rethink how they source energy. This location in the
Damn.
Nevada desert is powered by solar panels that generate enough electricity to keep the lights on in 22,000 homes, making Switch 100% renewable. But they're not the only ones moving towards greener solutions. Google's using machine learning to reduce its energy usage. Amazon, the largest cloud provider, is investing in wind and solar farms. Microsoft's taken its data solutions to extremes, unveiling its first underwater data center powered by tidal energy and onshore wind turbines. But David Capuccio says those efforts aren't happening fast enough because the type of data we collect is becoming more sophisticated. Think artificial intelligence and 5G. All those things that make your life easier also come with an environmental cost.
We're still doing the old email and the old type compute, but all this new stuff, everything requires some analytics or machine learning. That takes a whole different type of compute, uses a lot more processing power, therefore it generates a lot more energy and a lot more power, a lot more heat.
And that complicates the path to a sustainable solution. Capuccio says the responsibility isn't just on the tech companies anymore. Consumers need to educate themselves about their carbon footprint, though he admits reducing that data trail may be the biggest challenge.
The genie's out of the bottle. I mean, it's how do you get people to stop using social media? How do you get people to stop automating more and more of their homes? How do you get people to stop using Alexa? It's like, I mean, people are falling in love with technology, and what they fall in love with is how easy it is to use. It's almost like turning on tap water now.
Finds that some of those steps we talked about that companies like Microsoft or Google or Amazon have taken to reduce their carbon footprint is having an effect. A recent study that was published in the journal Science found that the compute capacity of data centers grew sixfold between 2018 and 2010, but energy usage only grew at 6%. So relatively, that is fairly stable. Having said that, you heard David Capuccio from Gartner there saying that things are about to change dramatically because of AI, the Internet of Things, and 5G, and that means more and more data collection.
Just
yeah, Kiko, I think they want to.
So when you think about, sorry guys, when you think about how much we're using, when just with all the data, you just don't compute the two, right? But you've talked to so many people throughout this climate change series. I'd like to know, were you particularly impressed with one company or one place and how they are combating climate change?
Yeah, it's tough to single out because this is such a vast issue. But one of the things that was most glaring to me is what we're seeing on the local level and what private companies are doing to step up in the absence of leadership on a federal level, national level. In many ways, it's kind of the narrative we've talked about over the last 2.5 months as it relates to the coronavirus. When you look at cities like Miami or places like California, they are having a conversation, not just amongst each other, but on a global level to build out their own template because they feel they just can't wait for sort of the national leadership to take hold. And then you look at a company like a Google or a Microsoft, we were talking so much even pre-COVID about how many companies were stepping up to say, look, we're going to be carbon neutral. In the case of Microsoft, we're going to be carbon negative. Those commitments are still in place. And that's something that we'll want to look for increasingly as the onus shifts to sort of the local leaders and private sector in the absence of leadership.
All right, Kiko Fujita, really enjoyed this series. Thanks for bringing it to us. All right, do stick around. Much more ahead on the markets on the first trade. Welcome back to the first trade. Let's take a look at another company we're watching closely on yahoofinance.com. That is Slack. Let's bring in Inez Ferre here. Inez, pretty big week it's turning out to be for Slack. You have Slack co-founder Stuart Butterfield putting out a lot of tweets over the past few days on the civil unrest, and the company reports earnings Thursday night.
That's right. And Cowen has initiated coverage of Slack with an outperform rating of $45 price target. Right now, the shares are trading below $37. And the analyst note basically is saying that this shift of working from home has given Slack a major booster shot to its market app, and that will accelerate adoption and lift the TAM, total addressable market. Now, also the analyst saying we think COVID-19 and work from home is acting as a major catalyst for market demand for customer adoption for Slack. And also the analyst saying we think that the Microsoft threat is overblown. And we would argue that as digital collaboration becomes more strategic, companies will gravitate towards best of breed. It also highlights that Slack integrates and connects over 2,000 applications. Now, what investors will be paying attention to when Slack reports earnings on Thursday after the bell, of course, is the amount of paying customers that it has been able to acquire. Now, back in March, in an SEC filing, the company said that it had gained 7,000 new paid customers from February 1st to March 18th during COVID-19. And you can see that the stock has really rallied over the last couple of months. But certainly, paying customers is something that investors are going to be paying attention to. Brian?
Hey, got to get paid. Got to make that paper.
That's
Thanks
right.
so much. Thanks so much, Inez. After months stuck indoors, many Americans are looking for a way to safely experience the great outdoors by going camping. And after seeing cancellations surge by 133% since March, campground company KOA says demand is starting to come back. Let's talk about it with Toby O'Rourke. She is the CEO of Campgrounds of America, which has more than 500 franchised campgrounds across North America. Toby, good to see you this morning. How is your business doing right now ahead of the summer?
Doing very well, actually. We started to see states open up camping within the past couple of weeks, particularly headed into Memorial Day. So reservations are definitely coming back. We're seeing a lot of pent-up demand, surge of reservations, and our campgrounds are full where we're allowed to be open, which is most of the country right now, except for a couple states still haven't quite opened up yet.
Toby, I know that your company conducted a survey recently of people who were looking to go camping. What are some of their top concerns? And are you seeing some new folks being brought into the camping circle, if you will, those who have never camped before, who are now considering it as a vacation given COVID-19?
Right. We did a survey at about the beginning of May, trying to understand how people were going to travel and recreate in light of the pandemic. And we did see a lot of interest. In fact, 1/3 of people who have never camped before are now interested in camping. So we're very excited to see. In terms of what people are looking for, safety is definitely top of mind. We asked people to rank different forms of travel, and actually campers and non-campers alike ranked camping at the top of that list for safety. So we know people are concerned about social distancing, and the outdoors provides a great way to do that, which is why we think there's a lot of interest in camping right now.
What are some of the things specifically that KOA is doing to help people be safe and social distance during their time of camping? I know that there was some talk about, shared bathrooms being an issue at campsites. What are you guys doing?
Sure. We put together pretty extensive operation guidelines for each of our parks to build a customized plan based off the restrictions in their area and how they wanted to operate. So you're going to see things such as modified check-in procedures to make them contactless. You may not need to come into the store to register. We're going to try to get you to your site as quick as possible. As you mentioned, in a lot of areas, you're going to see bathroom facilities closed, other group facilities closed, and even recreation and pools closed for these initial phases of reopening in particular. But we're obviously taking into account social distancing. There's ample space between campsites already, which is nice. And many people are coming by RV, which is a self-contained unit, have all of their own things, their own belongings, their restrooms, can cook their own food. So it provides a nice way to recreate, yet maintain a little diligence about the virus.
So if bathrooms in this first phase, if I heard that right, Toby, are not going to be open, basically, are you allowing people to come in who have RVs and their own bathrooms attached, and those who are just sort of independently camping without those, I guess, what would they do for a facility?
Right. It depends on the area of the country. Not all bathrooms are going to be closed. Sometimes we're required by the state or a county to close those bathrooms. And in that case, it would not make sense to come if you were a tent camper. So tent camping is probably restricted. But if you're coming in an RV or you're staying in a cabin that has bathrooms, then you're going to be fine.
Toby, I know this may be a little bit granular, but you do have campsites in Minneapolis, in New York, and on the West Coast. In light of what you've seen with this civil unrest, have you seen orders pick up that people want to escape some of these hot spots in the city and go out for a breather, and you do so via camping?
Well, we do know that camping is a good form of stress relief, and that's played back to us consistently in research, a way for people to escape everything happening. Now, I can't trace any reservations specifically to what's happening in the country right now, but we do know these areas that have camping opened up, people are definitely wanting to get out and camp. Now, Minnesota just opened for camping on June 1st. So we're just now seeing that recreational camping business come back in Minnesota. And California is pretty much still locked down by and large across the different counties are opening up, but not the whole state. So in general, though, we do see people, especially Memorial Day weekend was very busy. We see people wanting to get out of the cities and camp.
Toby, I know you have more than 500 franchise campgrounds across North America. That's a lot of franchisees. What are you hearing from them? Have any of them been able to get loans from the PPE program? Were they even able to, given the parameters there? And are some of them actually in jeopardy of remaining open?
Yes, this has been a very difficult time for our business. These are small business owners. These are not large corporations. And you're right, they're across the US and Canada. It's been very difficult financially. A large majority of our franchisees were able to get PPP loans, which has been helpful. We've been trying, actively working to get camping opened up for summer because it's a shortened season already. And so the more we cut into the summer business, puts them at risk of not being able to make it. And we definitely have some campgrounds at risk of not being able to make it because they've lost their spring and they're losing part of their summer. And God forbid we have a rebound in the virus and we lose part of our fall, we're going to see a lot of campgrounds have to close.
Toby, in terms of hiring, how does your hiring look different this year versus last year? Camp counselors, you name it.
Well, we had to pull back on staff. Us corporately, we own 32 parks ourselves. We had to pull back on staff in March and April and started to bring people back in mid-May. So we're fully staffed in June as we're heading into the summer. And all of our franchisees had to do the same. So we definitely saw workforce reduction. But by and large, if we're open this summer, we definitely need staff to keep going. And especially as people got those PPP loans, they need to maintain their payrolls. So that's also helping with our workforce staying in place. It's interesting about camping is a lot of people who work on campgrounds are called work campers. These are traveling campers that go to a certain area and work for the season, live in an RV. And so there has been some impact on that. These tend to be older people that had some concerns about the virus. So we did see some cancellations of that workforce coming through, and we've had to alter how we hire.
Toby, what about supplies, Toby? Listen, I've gone camping many times. I like loading up, going to Dick's Sporting Goods, buying a new expensive tent, a new barbecue, you name it. I am that person. But these stores have been closed. Is there a shortage of these supplies?
Camping supplies? Is that
Camping
what you're?
supplies.
Yeah. So, well, I was watching earlier this morning. You guys had a great segment on, outdoor retail coming back, like various sporting goods stores. And so I think that there's definitely not necessarily a shortage. I think people can now get their hands, because things are opening back up across the country. They can get their hands on those things. Like I said, a lot of people are traveling by RV. And over 50% of campers in our survey said they're now interested in buying an RV. So we're keeping an eye on people flocking to dealerships who want to now buy or rent RVs. So I think that that's a pretty interesting takeaway out of the pandemic, is that now we're going to see a lot more interest to purchase or rent those types of vehicles.
All right, let's leave it there. Toby O'Rourke, CEO of Campgrounds of America. Good to speak with you, and good luck this summer.
Thank you.
All right, do stick around. Much more ahead on the markets on the first trade.
All right, chat. As you can see, there ain't many trades going on today. I'm just getting out the ones I was already in. I don't want to force any trades. When you start forcing trades, you lose every time. So right now, I'm just, I just got my line set for the ones that I'm already in, but I don't have any new trades today. No new trades today. Let's see what else we got. I got them lined up. Let's see, what's this one? Shopify. I might start making some open orders just so I can have them just in case. Let's see. Let's see. Spirit. Yeah, Spirit ain't gonna drop no time soon. Now, if you can give me Spirit at this price. Oh, where did it go? Uh, you can give me Spirit at that price. Then we can talk business. So let's see.
All right, welcome back to the first trade. Roku is stepping up its game to make life easy for couch potatoes. Let's bring back our tech editor, Dan Halley, with all the details. Dan, I saw this news and I thought old school 90s TV guide.
Yeah, that's essentially what they're doing. So the Roku channel is basically
If I can
a
get in
place
here,
for
I'll take it all day.
users to go and get free
Let's see what's
content
this one.
through various channels in the channel. It's kind of confusing there, as well as access some of their premium content from services like HBO. And so you can go in there now. Roku has added an additional 30 channels, bringing it to more than 100 channels available through this service. And they've also added this updated guide. Now, all of this is to make the Roku channel more appealing to users because that is a major avenue of revenue through advertising dollars. And advertising has become the major source of revenue for the company, even above the actual players that they sell those Roku devices. Advertising is the primary means of revenue now at this point. And so they want to make this more appealing. So that will bring in even more advertising dollars. Obviously, it's a smart move on their part, but it also puts them into competition with other providers such as Netflix, Hulu, Amazon, Disney Plus. All of those providers are available on Roku devices, and for some time they have really been just a neutral party, the one running more or less the pipes, as we like to say, and the other services offering the content. But now that they're delving more and more into content, it will be interesting to see if the companies that they've worked with so closely will begin to see them more as a rival.
Dan, it sounds a lot like Dish's Sling TV. I mean, is this a threat, do you think, to Sling, and how might it be different?
I don't think it's necessarily a large threat. I think that it's different in that you're not really getting the full channels that you might get on standard satellite or cable TV. You're getting kind of repackaged channels, older movies, older TV shows, different offerings along those lines. And I think it really is just a means to get more eyeballs on this channel. Believe me, it does offer live news from the likes of Yahoo Finance, as well as other news outlets. But I think that this is something that is more along the lines of trying to get people to browse the various offerings that they have, and then as a result, get those sweet, sweet advertising dollars that the company really is a part of now.
Yeah, Dan, I love watching Yahoo Finance on Roku. But do you think we're at that point where there's just too much content on Roku? I'm an avid Roku user. I'm getting lost in the amount of content I have to surf through.
Well, it's interesting. I mean, you would think that, but then, as I wrote in my piece this morning, there were 36 million people
Right now,
who
chat,
accessed
I'm
the
just
Roku
setting
channel in
limits.
Q1 alone. So
Will they hit this
obviously,
limit? I
it
don't
is
know.
a big destination for users.
I don't always
I think
do.
there's something along the lines of 40 million active
I'll set them
Roku
anyways.
accounts. So that's a good number of users
So if it does come
who
back
have
down and
Roku
hit these
accounts who are then going onto the
prices,
Roku channel to view
then
content. So I
obviously
think
I'll
that
be in the
while there
trades.
is a huge amount of content available, it doesn't necessarily mean that users aren't going to go and look at the Roku channel, and that speaks volumes to Roku's overall strategy. Again,
Then
advertising is
normally I'll come
really
back
its
later
main
and check
driver of
on it. If
revenue
it
now.
hits it,
Not
cool. If not, then
completely
I get out.
eclipsing the hardware side, but it is greater than the hardware side now, and it will continue to be that way as the company stretches out.
Dan, what's your favorite channel on Roku?
Oh, Netflix, all day. It's my favorite channel, as they call it, app channel. It's always Netflix.
Yahoo Finance, Dan. Yahoo
Oh
Finance.
yeah, Yahoo Finance. Yeah, for sure. That's it.
All right, Dan Halley. All right, Dan Halley. We'll talk. We'll talk to you soon. Let's get right over to Inez Ferre for a look at the markets, but also several tech companies. Inez?
Brian, we're taking a look at Facebook this morning. CEO Mark Zuckerberg will reportedly be holding a town hall meeting today over concerns from employees who wanted Zuckerberg to remove President Trump's recent tweet regarding the protest. That tweet that said, when the looting starts, the shooting starts. The tweet had also appeared on Facebook. Taking a look also at Bank of America, the bank announced today that it is making a $1 billion 4-year commitment to help local communities address economic and racial inequality accelerated by the pandemic. Areas of focus will be health, jobs, and also housing. Today, we're also looking at Zoom ahead of the company's earnings. That stock is down more than 1% right now. Investors will want to see how many users are converted to paid accounts, how many they've been able to convert over the last quarter. And then also Slack was initiated at Cowen to outperform with a $45 price target, with the analyst note saying that the shift to remote work has given Slack a major boost. Also, we're looking at Starbucks after the company has said it is reducing hours for some of its employees, also asking some employees to consider taking unpaid leave until September, since most of its stores have only delivery or takeout, not that dine-in option. And then we're looking at Cisco after Cisco postponed its virtual Cisco Live 2020 conference because of the protests that are going on nationwide. In a video statement, CEO Chuck Robbins said, in light of the recent events and the turmoil happening, we feel this is the right thing to do. Also, Cisco would be donating some $5 million to charities focused on fighting against discrimination. The new date for that conference will be announced later in June, but certainly Cisco giving money towards charities to fight against discrimination and social injustice. Brian?
All right. Thanks so much, Inez. Alexis, well, another day, another market rally. Despite everything going on in the world, the market continues to press forward. But keep in mind, we have a jobs report later this week that is likely to be pretty grim too.
Yeah, that could be the next catalyst, Brian, although a lot of that might already be baked in. But a lot of the people we spoke to today, the market strategists, say that one of the reasons why the market is not reacting negatively to what's happening throughout our country right now is that it doesn't seem permanent, right? Hopefully, thankfully, and that will pass and that we'll get back to business as usual. The one takeaway was that the longer these protests go on, they have more of an impact on the economy. We could start to see some sort of an impact on Wall Street, but so far, that's not the case.
Not the case, but we're all on the lookout. On the Move is coming up next with Jessie LaFlamme. She's the CEO of Pete and Jerry's Eggs. Through the pandemic, egg prices have surged 50%. I know our very own Julie Hyman and Adam Shapiro will get to the bottom of this one. Of course, they'll both have their eyes on all things markets. Stay tuned.
Welcome to Yahoo Finance. I'm Adam Shapiro along with Julie Hyman. This is On the Move, and in just a minute, we're going to be hitting some of the news headlines which are driving markets today. As we take a look, we are trading higher. The S&P 500 is up almost 7 points. The Dow is up more than 158 points. The Nasdaq, however, is falling a bit. It is off 37 points with crude trading higher right now. WTI is up almost 1.5%. Driving the headlines in the markets today, protests and riots continue to sweep across the United States. 4 police officers in St. Louis were hit by gunfire, and an officer in Las Vegas was shot in the head. That officer is clinging to life at an area hospital on life support. A new report from the Congressional Budget Office says more than $3 trillion in federal economic stimulus will only, quote, partially mitigate the deterioration in economic conditions. They also estimated the CBO that it could take up to a decade for GDP to return to levels we saw just before the COVID-19 pandemic. And out within the last hour, the Atlanta Federal Reserve Bank predicts that GDP in the second quarter is going to fall almost 53%. Voters are casting their primary ballots in several states and the District of Columbia today, with a surge in absentee voting by mail. Jessica Smith is standing by for us to talk about that and much more, plus the number of cases of coronavirus. Worldwide, 6.3 million testing positive, the number of dead over 376,000 in the United States. We have about 1.8 million people who have tested positive, with the number of dead exceeding 105,000. We have to turn our attention to the headlines which are driving markets, and that has to do with President Trump, as well as the primaries and the riots and protests, they are separate, that are taking place across the country. Jessica Smith is in Washington, D.C. with the latest for us. Jessica?
Yeah, Adam, President Trump is threatening to deploy the U.S. military to stop protests on riots across the country. In a Rose Garden speech yesterday, he said that these destructive protests he talked about those protests and threatened lengthy jail times. And he says that mayors need to dominate the streets with the National Guard, or else he would step in. Let's watch a little bit of what he had to say.
Mayors and governors must establish an overwhelming law enforcement presence until the violence has been quelled. If a city or state refuses to take the actions that are necessary to defend the life and property of their residents, then I will deploy the United States military and quickly solve the problem for them.
Now, President Trump also called himself an ally of peaceful protesters, but I think it's important to note that just before the speech, there was a peaceful protest near the White House, and DC curfew is set for 7 p.m. right now, and around 6:35, 6:40 or so, law enforcement started moving those protesters out using tear gas. And then, come to find out a little bit later, that was so President Trump could walk out of the White House and go stand in front of a church nearby. He held up the Bible. He didn't say much, but he did have that photo op moment in front of the church. The bishop who oversees that church says she was outraged by that. We're also hearing a lot from Democratic lawmakers who say the president tear gassed peaceful protesters in order to have a photo op. We did hear from Vice President Joe Biden. He was speaking this morning, and he did tweet saying he's using the American military against the American people. He, being President Trump, tear gassed peaceful protesters and fired rubber bullets for a photo. For our children, for the very soul of our country, we must defeat him. But I mean it when I say this, we can only do it together. Now, several states and DC are voting today in the presidential primary. Vice President Biden is the presumptive nominee, but it's going to be interesting to see how these states and here in DC, how they handle voting and handle the polls with the pandemic going on. Some states had postponed, some have expanded mail-in ballots. So we'll really be watching to see what states learn, what they do to protect voters at the polls ahead of the general election in November.
Jessica, has the president yet responded, or have we got any indication from the White House that he's going to respond to Biden's speech within the last hour?
No, we haven't yet. I don't know. I've been looking at his Twitter here, so we'll keep an eye out if he has anything to say, but we haven't heard about an official response at this point. But I wouldn't be surprised if we heard from the president here sometime soon.
All right, Jessica Smith joining us from Washington, D.C. Want to turn our attention to these markets. And as we pointed out coming into the hour, The Dow is up more than 100 points. How much more can this go? Michael Aroney is the chief investment strategist at State Street Global Advisors, and we appreciate your being here, Michael. Got to ask you. You point out that the risk is that some of the temporary impacts from the pandemic become more permanent. For people who are buying into this market right now, help us see those risks and why we might want to be cautious.
Well, I think that from my perspective, this incredible market rally that we've had in the face of an economic recession, while corporate profits are plummeting and job losses are mounting, is a head scratcher for many. And I think investors are looking beyond the current environment, and they're looking at the fact that policymakers have put forward a firm commitment to do what it takes. They're looking at some economic data that seems to be coming off of the bottom, and they're expecting a recovery. I think the real risk to this, Adam, is that if this isn't temporary, if the unemployment figure remains elevated, if consumers don't come out and spend aggressively, I do think that poses a risk to this rally, but it's going to take a little while to determine if that's going to happen or not.
Michael, it's Julie here. Good to hear you. You said in your note to us that essentially what is being priced into the market now is a near perfect resolution of this pandemic. And you, of course, not only have the pandemic, you have rising tensions between the US and China, and now you have all of this unrest going on in the United States. So do you think that investors really need to be positioned defensively right now, given those various factors?
I don't think investors need to be positioned defensively. I think the way that we're thinking about the current environment is kind of balancing off those risk and return trade-offs. So, for example, one of the things we think is an opportunity are businesses who can adapt to the current environment through kind of innovative approaches and really kind of thrive. So if you think about it, things like remote access, cloud storage, the internet-based solutions were all trends prior to the pandemic and the current tension that exists between the U.S. and China, and even here kind of with the social unrest. And I think many of those same trends remain in place. So, for example, we continue to like technology companies that are on the forefront with good organic growth rates and with kind of software solutions for the current environment. And so growth within software continues to be an area that we think is attractive in this environment.
Hey, Michael, it's Brian Chung here. So amid all the political risk here in the United States, too, a lot of investors might be saying, maybe I should take my money outside the borders of the U.S. Do you think that's a good play? And if so, where do you go?
So it's interesting in that if you do adhere to this idea that once we're past the pandemic, you will begin to see a recovery in the economy. And numbers even outside the U.S. suggest that this is the case, whether it's China or even in segments of Europe. So from a relative value perspective, Brian, some of these places remain attractive if we can get that recovery. So, for example, China was the most impacted early on and seems to be at the forefront of recovery, although it has been in fits and starts. And if you do anticipate manufacturing to continue to pick up, what's missing, the key ingredient, is that demand. So if we do start to see global demand pick up, China provides an interesting opportunity, as does Europe in some way, in that places like Germany, for example, if that manufacturing kind of improvement that we're started to see is met by some element of demand during recovery, we think there is some relative value opportunities in Europe and in China.
But if an investor listening to our discussion right now is also factoring in what the CBO is predicting, that it could take as many as 10 years to get back to the kind of GDP growth we saw going into the pandemic, you point out that there is disinflation, there is a deflationary pressure on asset prices across the board. Wouldn't it be risky right now to be buying in?
Well, it could potentially. There are a lot of risks on the horizon, as was mentioned before, whether it's rising tensions between the U.S. and China, whether it's social unrest at home, the political landscape is heating up. The segment before just had the kind of the likely back and forth between President Trump and Biden that's likely forthcoming here. So there are a number of risks on the horizon. But I think what's the key here is if you believe that on the other side of the pandemic, we will return to some
All
element
right,
of
Chad, I'm going
economic
to end it
growth
off right
with
here.
very low rates,
Hope you guys
benign
enjoyed the day.
inflation,